Congratulations, you finally received your funds for the EIDL loan, but you want to know what you can and you can't use the loan funds on, and that's what we're going to be talking about in today's video. Let's jump into it. What's going on, everybody? Welcome back to the channel. If you're new here, my name is Jonathan Moore. I'm a photographer, filmmaker, and a creative entrepreneur, and I like to make videos like these for other photographers, filmmakers, and creative entrepreneurs who are trying to build a life on their terms and get it how they live. So if that sounds like something that you're into, feel free to check out some of the other videos on my channel and maybe even consider subscribing. So in today's video, it's just going to be a brief follow-up to a couple of other videos that I did previously on my channel. I'm going to be talking about the EIDL loan, what you can use the funds for, what you can't use the funds for, and what could also, qualify you as defaulting on the loan so you don't get in trouble with the SBA. So when it comes to the EIDL loan program, you know that it's all basically self-certification. You don't really have to prove, your income or your expenses, right? You basically just do the streamlined application. Most people were filling out the application because they wanted to get the grant money. But then again, also some people were offered a loan, probably a decent sized loan, and it has favorable terms at 30 years with 3.75 interest rate. So some of you guys might have been tempted to take it. And if you have taken it or you have received the funds, but you're just not sure what you can and can't do, that's what I'm going to be talking about in today's video. Okay, so before I jump into that, let's just quickly recap. You already know that this loan is at a 30-year term at 3.75. You have a 1 year of deferred payment, so you don't have to make any payments in the first year. Although you do have to keep in mind that interest does start accumulating as soon as you receive the funds, not when you start paying it back. Also with this loan, if you received any loan funds under the amount of $25,000, you don't have to personally secure it with any collateral or any hard assets. But if you received an amount greater than $25,000, then you do have to secure the loan with any type of hard assets, even intangible assets, whether it be like copyright or intellectual property, anything that does hold value, you will have to secure the loan against. So let's begin with some of the things that you can't use the loan for. Now, there was a lot of confusion initially in the beginning, but I'm pretty sure that the confusion has been cleared up as far as applying for the EIDL and the PPP loan, which, yes, you can apply for both. The whole thing is that you can't use the funds on the same exact things during the same exact time period. The PPP was more directed towards payroll and qualified expenses, but really had an emphasis on payroll, whereas the EIDL is really about working capital. It's about things that keep your business in operation from day to day. Some of the things that you can't use this loan for is to purchase any hard or any fixed assets. So if you're an Uber driver or you're a Lyft driver, you can't go out and you can't go buy a car. If you're a real estate investor, you can't go out and buy property. Also, you're not really supposed to use this to buy any type of equipment or machinery as stated in the loan. Also, these funds are not supposed to be used to expand your business. So you're not supposed to go in, buy new locations or use it as a means to grow your business or even start a new business. Really, it's supposed to be working capital for the day-to-day operations. Also, another caveat that they have in here is that any products that you purchase with this loan, you're not supposed to purchase outside of the USA. That could be a little bit tricky if you have some type of merchandise or maybe if you're drop shipping or something along those lines. But if you do have any type of other funds coming into your business, you can allocate those funds to make those purchases and then use the funds from the EIDL and try to, keep everything as American made as possible. Another thing that you can't do with the funds from this loan is you can't restructure any debt. So if you have any, high interest rate credit cards, or if you have any, higher interest rate debt, you can't use the funds from this loan to pay it off and try to refinance it and have a lower interest rate. Now, you can use it to pay off credit cards, not pay off, but pay down your credit cards if it was used solely for the purpose of your business. Sometimes with sole proprietors, that could be a little tricky, especially if you don't have a business account or you're just using your personal account. So you're going to have to make sure that you really keep good track and good records of what you're using the funds for, but you can use it to pay down credit cards. You can also use it to pay down loans if the loans are used for things that are inside of your business. So let's just say that you have a car, maybe a credit card or something like that that you're using for your business. You can use it to make the loan payments, but you can't just use the funds and pay the car off and try to restructure and have a lower interest rate. Another one of the things that you can't use the loan for is to pay off any federal debts. Now, you can use it to pay off IRS obligations, but that might be a little confusing and a little tricky because you say, you know, no federal, but IRS, yes, you can. So the way I take it as is a federal debt might be, say, a student loan that you have. That's a federal student loan. You can't use it to pay off that student loan, but you can use it to pay any IRS obligations, which could be maybe taxes that you owe or maybe even back taxes that you have. And also, one of the stipulations of this loan to remain compliant and not be in default is to maintain or stay current on your IRS and your tax obligations. So we've talked enough about what you can't use the funds for, but let's talk about what you can use the funds for. So the funds are working capital. So essentially, it's supposed to be used for your operational day-to-day, anything that's going to keep you in business. So that could be, you know, gas. You can use it on payroll if you're paying employees. As far as paying yourself, that's a little bit tricky because you have to render services to the company, but you can pay yourself. Briefly, just to touch on paying yourself, you're not supposed to give yourself any bonuses, any raises, or any type of disbursements, because if your company is in the red, that's supposed to be a big no-no. But when it comes to the self-employed, we usually do an owner's draw, owner's compensation. So you can pay yourself with it, but you know, you have to render some type of services to the company, which would, you know, essentially, you know, qualify you for a payout. Once again, you can use the funds to purchase products that you need, the goods and services that you sell within inside of your business. You can use it to purchase merchandise that you plan on selling and or reselling. But once again, you just kind of got to stay, you know, a little cautious, especially if those products that you're purchasing are outside of the USA. So if you have any type of income coming into your business or any type of other funds available, you can use those and try to keep the EIDL loan proceeds strictly for purchases inside of the United States. So that about sums it up for what you can use the proceeds on. It's pretty broad, it's pretty general, but it's supposed to be operational capital. So, you know, anything that you use day to day to keep your business up and running. So an example would be for myself is that, you know, I use a lot of subscriptions, whether that be to, you know, online subscriptions. That would also count, you know, like I said, gas, you know, you got to get around, you got to meet with clients, all those other type of things. The daily operational expenses that you need to keep yourself in business. And once again, you can use it on different types of expenses. You know, maybe you do have a home-based business. You do have to kind of be careful if you're, you know, using it for something along those lines because they don't want it to be seen as you're trying to, you know, pay off your mortgage or whatever. But if you have rent, maybe you're using a shared space, which you might not be using that much these days with the whole thing going on. But those expenses count as well. Once again, you are allowed to use the PPP funds, but you're not supposed to have these two overlap at the same time. So with all of that being said, let's talk about a couple of things that might qualify you as defaulting on your loan. So some of these things that could get you into a little bit of trouble or put you into the default category would be missing payments, okay? You don't want to miss any payments because at that point in time, they could say, you know, you're defaulting on a loan. Also, you don't want to sell any of the collateral that you use to secure your loan. So if you use any type of assets like machinery, equipment, even the intangibles, you don't want to go ahead and sell those things because then at that point, you're going to be seen as defaulting on a loan because those are the assets that are used to collateralize your loan. Also, a few other things that you want to look out for is that you don't want to default with any other creditors because that could put you in default of your loan. They say death, which, you know, whatever, I guess, I don't know. That puts you in default because I guess you're dead at that point. Also, any type of adverse economic conditions. So you just want to be careful, which is a little bit scary because 30 years out, you don't know what's going to happen or if something, you know, this crazy is going to happen again. That's going to put you in a little bit of turmoil. Also, bankruptcy, if you were to go bankrupt, that will put you in default of the loan, even though interestingly enough, you can bankrupt this loan, but that's another conversation for another day. And selling your business. You're not supposed to sell the business and or change locations. Now, you know, I don't know for us people out there who have a home-based business, how much of a stickler they're going to be on those rules. Essentially, when this loan was out, it's an economic injury disaster loan. So that's like if a hurricane had came through somewhere and, you know, they don't want you to just take this money, pack up the business and move to another town. They want you to try to keep business exactly where it's at. So if you have a home-based business, that doesn't mean that you can't move, or if you move, you're going to get in trouble. But you just always want to make sure that any of these things that could put you in default with the SBA, you just make sure you get it cleared with the SBA. And the last thing that could make you default on your loan is any type of civil or criminal charges that could be brought against you or are brought against you. So you just want to make sure that you're just focusing on your business and you're staying out of trouble and trying not to be in the wrong place at the wrong time. So with all that being said, that is what you can use it for, what you can't use it for, and some of the things that could qualify you as defaulting on the loan. Make sure too that you do keep good records. They do have that in there where you have to keep records. I believe it's 3 years after the disbursement date, and at the end of each fiscal year, you have to submit those records over to the SBA on what you are using the funds for. So with all that being said, hopefully this loan works out for you if you did decide to take the funds. If you didn't, it's all good. Maybe you took the funds, but you're a little bit nervous and you say, you know, maybe I don't want it anymore because of all the, you know, obligations that they have tied to this loan. So in that case, you can always pay it back at any time. There is no prepayment penalty. I believe that you go to pay.gov, and that is where you can have your account and see what you owe and start paying back the funds. If you did take this loan, good luck. If you didn't take the loan, good luck. I hope everybody out there in your business can find a way to succeed, and, you know, hopefully we'll get back to some type of normal sometime soon. And so that's it for me today. For all my people out there who are trying to build a life on their terms and get it how they live, this is your man, Jonathan Moore, and I'm signing out. Peace.